Hello, everyone, and welcome. Now I'd like to hand it over to Scott Van Valkenburgh, Global Alliances and Channels Lead for Genpact.
Excellent. Thanks, Jennifer. We're super excited to share with everyone today, how the industry is transforming in health insurance, in particular in the area of finance. We with our esteemed colleagues today from Deloitte, Workday, and OneSource have been really spending quite a bit of time looking at and thinking about, how we can help clients, in the long term. And I think it's just become much more accentuated with what's going on with COVID. So with that, let me introduce who we're going to have on as our colleagues. Super excited to have them join this lively conversation we're going to have. Jason Weinstein is Deloitte's Consulting Life Sciences and Healthcare Strategy and Analytics Leader. And he's the Chief Digital Officer for Healthcare within Deloitte. Jason specializes in digital transformation, analytics, AI, and machine learning. Also, he focuses along in technology strategy, operations models, and core modernization. He co-leads Deloitte's Consulting Healthcare Innovation Catalysts and Ecosystems and Assets and Signature Issues and Programs. So Jason, super happy to have you on board with us. Rakesh Nangia. Rakesh is a leader in Genpact's Healthcare and Life Sciences vertical. He has over 25 years of global experience across both technology and management and large client operations and program management. Me having come from Genpact, it's been a joy working with Rakesh over the years. Andy from Workday, Andy Davidson, leads the Workday's global financial services market for Workday. In his role, he's been driving Workday's momentum and strategy and maturity in financial services vertical, and also in healthcare and life sciences as well. So super happy to have you guys with us. Welcome. So with that said, why don't we dive in, Jason? You've been dealing with these issues probably for quite a long time at Deloitte. Now you're probably seeing them accelerating, clients looking for guidance and help. Why don't you share a little bit of your thoughts on what you've been seeing in the market overall and why the time's now for people to think about doing things differently?
Yeah, absolutely. There has been a massive shift underway in the industry, and we predicted how that was going to play out through 2040 in our future of health point of view. And through COVID, we think that 2040 timeline has been accelerated by at least 10 years in the industry, and really allowed us to test out a bunch of orthodoxies that we thought were difficult for the industry to shift from, but really in a matter of overnight have had to shift.
So it's unbelievable actually what a good crisis does to a person's thinking and organization's thinking, right? And in one way, it's been a terrible situation with COVID, but I think it's also accelerated. Maybe people have been waiting to see or watch that their new normal is different. How are you seeing your leadership stakeholders, across this industry trying to deal with this?
Yeah, it's a great question. I think that as we've looked at this shift, which has been sort of was underlined by a series of changing demographics, by now what has been a mix shift that's going to be an accelerated mix shift into government programs, Medicare and Medicaid, the economics of those businesses being different, and then we see a lot of the orthogonal competitors coming in that compete on a different basis or don't have, if you will, the legacy baggage that a lot of the incumbents have to unwind. They can really compete much more nimbly. So we've seen a lot of interest in and accelerated adoption around value-based care and population health, which has been a topic that has been happening or it's being discussed for a little while. But we really see, even with the government making certain adjustments during the COVID period to reimbursements and other constructs, that a greater adoption of value-based care and that shifting of the dollars from sick care to well care pretty dramatically. We've seen this idea of customer-centric thinking, and so organizations are trying to figure out how to compete and survive and how to create stickiness, how to do behavioral nudging or use social determinants of health, or how to really take out friction and waste in the system, which has been pretty significant historically. And then while there's been
Sorry, so I want you to elaborate a little bit on,
Yeah,
so
please.
you think about the finance function on that with Jason. It's honestly, it probably hasn't changed much in the last 10, 15 years, right? There might be a bespoke adoption of a technology or approach, or if these organizations are going to have a new normal, a new operating model, new cost structure, what does it mean for CFOs of these organizations from your point of view?
Yeah, I think for CFOs, what it means is the expectations on the finance function have changed or have become more acute, because the idea of understanding the true cost basis of services or operations, the ability to drill down through more transparent allocations, the ability to more nimbly project medical cost trends, not just in the COVID context, but in subsequent waves of deferred elective procedures, in ways to preserve cash, in ways to potentially reboot or provide sustainment for a robust provider network that is under great strain to stay afloat during this period, puts really the finance function in at the center, and the level of agility needed to react, to do scenario planning, is just really unprecedented.
No, I think those themes we're seeing with our clients as well, and that's probably a good transition. So Rakesh, from a Genpact perspective, the financial operations, performance improvement, echoing a bit where Jason was leading. Why don't you share a little bit of what you've been seeing?
Sure, Scott, and Jason again completely agreed. I think the healthcare imperative across the CFO organization has radically hastened given the COVID environment. But Scott, I think we are pretty much seeing the same thing with the member being at the center of the CFO experience, if you will. There is a huge focus and impetus to really look at how to allocate costs with medical loss ratio driving the overall industry, that being standard. How do you really look at reducing the administrative cost quickly? And whether it is because patients are moving across the commercial space to Medicare, or whether it is there is bundle payments or pay for performance, or even the whole vertical integration leading to ACOs, are all factors that typically we are seeing a lot of our peer CFOs grapple with, right? And you add that to a situation like COVID, and you're saying, hey, how do I really reduce my dependence on technology or legacy systems, get some real-time data, and really being able to react fast to that? And again, as Scott said, how do you really allocate costs? How do you predict your future-looking cash flow are some of the challenges that we are seeing with some of our customers in the current time, Scott.
Yeah, and one of the things that really stands out is this agility, Jason, you said, and Rakesh, this anchor almost, you often hear people call it this technology debt, right? This legacy systems, multiple systems, inability to have interoperability. It takes days and weeks to understand really the financial health and performance of an organization. It feels like, Rakesh, from our client conversations, it's almost becoming a continuous pain point you're hearing. Is that true?
Oh, absolutely. I think it's a question. A lot of our CFOs are basically saying, how do I really stop my dependence on technology? How do I really get away from the multitude of legacy systems that I have and really get to a point where I can really be agile and really get insights that can help me react quickly and pass on the benefit to my internal stakeholders as well as to my members, right?
Yeah.
We've seen telehealth come in quickly and cost bases have changed because of COVID. So again, a real-time example of how CFOs are really being pressured to adapt very, very quickly.
Yeah, and really supporting the members, which is the mission of most of these organizations, is I think are critical, and having the tools to leverage that. So that's probably a good transition, Andy, to Workday. And if you look at Workday's always been cloud first, really a disruption in not only the health insurance industry, but overall in the marketplace. If you look at that viewpoint from a Workday perspective, how are you seeing it? And really give me a little bit of background and view on, how you think, the power of a platform and a cloud and the interoperability is really helping CFOs think about it differently.
Yeah, Scott, thanks very much, and great to be with you again. I think it's a great segue from both Jason and Rakesh. A lot of the themes that we see and why Workday even exists have just been really brought to light and accelerated in this very, very unique time. We've got a great base of customers in health insurance already. We're growing that quite aggressively. And a lot of that is the basis of the agility that they get with the platform, the variety and the options that they have in their own operating models, and the recognition that the world is changing faster than they can really adapt to. And especially COVID, as Jason has said, things are moving at a lightning pace that they thought would take years, are now being done in a matter of days and weeks. And so, the platform, Workday's platform, as a multi-tenant, cloud-based, cloud-native platform, is completely there to be able to address the agility that's required to provide folks in the health insurance industry with a lot of variables and a lot of unknowns, how they can actually handle what their forecasts are going to be for claims, for premiums, how are they going to account for government programs, how are they going to staff the Office of Finance, and what's needed, and how can they better really sort of scope and scale how to address these issues in an efficient and effective way. And part of that is how they actually partner with this broader concept of an ecosystem, which includes finance as a service as one of those business model options that they have.
Yeah, absolutely. So let's dive a little more deeper into that. So, I think clients always hear the words agility, insight, efficacy, these types of things. Give some highlights. Tell us a bit more about it. Give some examples as you've seen it, and then we'll shift the dialogue, guys. Of how do you take a great cloud-based platform and wrap a domain-based as a service model to really, grow and adjust with clients. So, Andy, why don't we dive in a little bit on these three areas?
Sure. No, happy to, Scott. And we have, I want to say that we have so many great clients who are advocates for us in the market with their peers and just in the market in general. It's a tremendous source of inspiration in what is really challenging times. I think Jason talked about continuous what-if scenario modeling, and as part of that agility, the capabilities that we have through Workday Planning, is completely able for folks to be able to collaborate in a distributed environment, real time, with that knowledge of being able to test certain drivers, certain models, certain scenarios, and have everybody reacting and commenting and collaborating around the same single source of data and outcomes. That is a tremendous perspective just to help with that whole planning flexibility. A lot of folks that have opted for Workday, they've naturally had to pivot towards the cloud or were part of their entire cloud strategy. So the elements of security, the elements of a single model and connectivity, it's been a really seamless transition for a lot of our folks who have moved nearly overnight to a virtual remote type of working environment. One of those who's been extremely vocal about this is Aon, a large client of ours in insurance globally. And, they had a virtual close. And they basically said, if there's, the CFO had said on television, we could not have done this the way we were doing things across all the different entities, across all the different countries, if we didn't have Workday as that platform. It could not have been as seamless and efficient to have that virtual close that they just did as a matter of course. Those insights, the fact that we're able to bring together disparate resources, disparate sources of data together into a single platform for operational insights, is extremely powerful. I have to chuckle a little bit about one of our customers, one of our insurance firms, who said, I'm not recommending this to anybody, basically said, now we have at the touch of our fingertips the data that we need to drive the analytics to help run our business. It used to be in filing cabinets. and I don't know how many of you all are out there like that, but the fact that we can move customers from filing cabinets to the cloud and help them and help them drive data decisions is pretty fantastic.
Yeah,
we just welcome. Yep,
that's great. Yeah, and I think and then let's take it a step further. Okay, so it's in the filing cabinet, now it's in the cloud, and then how do you help people free up their time to spend to look at it and take action, which is a great segue. Rakesh, we mentioned this kind of finance as a service. I think conceptually someone can see this and go, well, that sounds interesting. Tell me more. What does that mean? So, why don't you give us a quick highlight on it? And then, why is this the right time and for CFOs to really dramatically think differently about this when you have platforms like Workday and partnerships like the ones we have, which you see across both OneSource, Deloitte, and Genpact together?
Sure, Scott. And I think that's a really interesting and optimal question. As Jason was saying, and Andy deliberated, right? It's virtual close, and now with COVID, it's virtual employees with analytics all in the cloud, right? And I think all the CFOs in the given environment, with their needs from their internal stakeholders demanding more and more of that function, and more insights insights that can lead to behavior changes in the way business is being run, in the way prices are being configured, in the way providers are being credentialed, in the way they are being paid, right, is necessitating how do they quickly come up to speed with a product and a service that enables them to do that real time, right? As the word says, finance as a service, it's pay as you go. It's independent of technology ramifications. It is independent of huge investments to run analytical models. It's basically getting you up to speed, giving you the information when you need it at the pace that your business and your members demand. So, and I think COVID has really pushed, as we heard earlier, the need for implementing and adopting to a standard which is faster to implement and has no really dependence on past systems. So I think in my mind, this is kind of, the time to do this, and finance as a service can really, come up to speed and can be implemented much faster, giving the CFOs and their stakeholders what they want.
Oh, that's great. Great. Yeah. Now you got me excited.
So Scott, we just had a question that came in and I wanted to bring that up. So how do we define finance as a service?
Wow, that's very timely. That's a great question. So, you get a lot of folks thinking differently of what that might mean, what might it not mean. Maybe, Rakesh, we could go in this to our next slide around this, especially, how does this impact the health insurance industry and how did they start looking at this? Because the way I heard you talking about it, sounds like almost like it's this Uber-like service that for my finance function, for the core ops, it can go up and down and do what I need when I need it. So maybe tell us a little bit more, Rakesh, on this.
Sure. So I think, look, we've had two of our customers look at implementing something which is, on the same platform, trying to not only scale up quickly, but also ensure that we are able to harness the variability in their needs as they move across different models, right? We've added modules, we've added flexibility quickly, and we've enabled them to really, to Andy's point, deliver virtual closes, right, seamlessly, because we've been able to literally switch on the tap faster, and we've done it on the cloud, right? So we've been able to pivot to the customer's need at a pace that they have wanted us to do that.
So let me get this right. So basically, the old model, figure out a target operating design, select an ERP, then maybe look at someone to help on run operate. You've totally blown up the model, and that cash outlay a client has to put for that, and literally just said, you get it in faster. We run it for you, not only the technology, but those core processes for you, and I pay as I go. And I'm paying along the line, and I don't have this huge cash outflow up front, and I have all this agility as my business changes over time. Is that really what I'm hearing?
Absolutely, and done at a pace that far surpasses what we used to do earlier, at a price point that is far more higher return on investment.
Wow.
With no encumbrance on any technology. So it's wow, absolutely.
Wow, that's great. Really interesting.
So Scott, we have another question that came in. So what are your respective clients doing about COVID?
Yeah, that's a very timely question. Why don't Jason? I know Deloitte, you serve the best of clients, and you have a lot of client intimacy. What's been the take with you guys around this, and in areas, especially in the finance function, that CFOs are saying, please help me?
Yeah, absolutely, and thank you for that. We have some great clients that we serve. We agree. So when I think about that, they're looking at this as not a chance to just return to normal or to increment, but it's how do we reassess the workforce, and the workplace. So is it the virtual close or the trend scenario planning we were talking about? But how do we rethink the work in finance? How do I think about my workforce? Because I've had a set of skills that maybe aren't the skills I need in the future. And let me use this as a chance to pivot those skills, look for a lot more augmentation, so human-computer coupling or automation. And let me look at workplace and distributing my work more effectively to the teams. And to the earlier point around capital spend rationalization, there's quite a bit that's going on right now around cap spend rationalization as well as innovation. So how do I get to fewer strategic platforms? They're asking, so fewer strategic platforms, how do I leverage the ecosystems more deeply to innovate? Because I just can't keep pace within my four walls, and it's too expensive and I don't have access to that talent. So how do I leverage the ecosystem? And then how do I think about basically everything as a service? So how can I now have the variability in my business to scale and adjust appropriately to the business conditions that will be so dynamic over the next several years?
Yeah,
those are
that
a few
makes
of the
a lot
hot
of
areas.
Sense. So the themes I'm hearing, Jason, are, hey, our business is unpredictable. Our way of how we used to work and the skill sets and the people we need probably are different, and the technology that we're anchored to today isn't helping, right? So basically, those are the big themes of managing agility and uncertainty, better visibility, right, and adjusting the skill set and tools of the workforce as needed to support the function. Is that the themes?
Yeah, exactly.
Excellent. Well, no, I'm sure with the crisis, the ability to think about that and really knowing, what the future is going to mean and how to support the members and the business as a whole is critical. So why don't I shift gears a little bit around that, and Andy, from your perspective, and as clients start looking at this kind of new approach on doing this, how does this compare to other target operating models, their old way to maybe this completely different way?
Yeah, Scott. So absolutely, there's a lot of change that is going to continue to happen, and as we've seen over just the last 3 to 4 months, that change is going to be completely unexpected and unplanned for. The kind of model of finance as a service allows customers to be able to flex where they need to at those given times, and to be able to quickly ramp up those kinds of skills and resources that they need to be able to accommodate however the business changes. A lot of that has to do with with the training and skilling that they have both in-house today and what they're going to need in the future. We've had customers where they've actually delivered to their finance departments how to work remotely through Workday. So it's the blend of the human capital side, but also the finance side. A lot of those customers today that are in these sort of traditional models won't have the capability to be able to flex as they would if they had a finance as a service type of model.
Oh, that's great. It's interesting to me. I think, I mentioned an Uber example before, but if you think about the Uber model, at the end of the day, what Uber does is it helps you get the number of people safely to where you want to go, right? And they don't ask you the extraneous questions of outside the number of seats, do you want a Honda, a Toyota, or whatnot, right? Because they're really focused on what the outcome is. And the way I'm hearing you're telling it about it, that's the same kind of question where in the past, maybe people spent a lot of time deciding how they might do their AP function a little bit this way or that way. But at the end of the day, they want to just process those and do it accurately and be nimble about it. And maybe that's a different way of thinking, right? As people start looking into this, is where's the outcomes they want to drive it? That's what I'm hearing you say versus, how do I customize everything and really make it so one-off I can't really get agility? Does that kind of flow a little bit in the way that you were saying?
Yeah, Scott, I think the upheaval of the last several months have given a new light to the fact that they need outputs and they need reliable, measurable, auditable outputs that their members and that their stakeholders and investors can actually rely on. That's number one. The other point to this is that what you're doing to be able to give that flexibility and agility into that as a service model for finance is you're really allowing, number one, a lot of folks to be involved and engaged in flipping the pyramid from performing transactions in finance to being a good business partner and increasing the time on insights that are going to be very unique and special to their particular elements of business and their strategy.
Yeah, so you're really helping the CFO get the time and the data to be driving strategic decisions and forecasts, cash allocations, working capital, et cetera, versus is he wondering, did the books close the right way, right? Or do we have enough people to help do the quarter end close, et cetera? So
Exactly.
Yeah, no, I get it. That makes a lot of sense. So let's dive into this in a illustrative business case. So Rakesh, Genpact has had these dialogues and working with our partnerships with both Workday, Deloitte, and OneSource. Why don't you translate this to the real thing? What does it mean for a CFO on the types of things they could think about from both a time, cash, and results perspective?
Sure, absolutely, Scott. And I think it's appropriate. We had a potential customer that came to us last year struggling with a typical scenario, multiple legacy systems that were bolted on to an ERP system, pretty archaic, very minimal digital efficiencies being driven across, and the cost of finance to serve was pretty much very high compared to their industry peers. And, they decided to kind of move on to finance as a service model on the cloud, single instance of ERP, and it basically, was turned them literally upside down, right? The results were wonderful. They were able to deliver much faster insights to their internal stakeholders, leading to a fairly significant insight into how they were pricing their products. And we were able to do that in significantly reduced timeline compared to what a legacy deployment would have been, right? We had very tangible benefits in terms of cycle time reduction, in terms of the amount of dollars that we saved them. And in the end, we had a customer and a CFO who was really, very happy. And the best part was, his costs were not very high. He was able to kind of spread his costs over a 5-year term, rather than putting everything at one go in something that would have taken much more longer to implement and give the returns that he was looking at.
Yeah, no, that's great. I mean, I remember when you were telling me before we were doing this webinar that this how excited the client was to be, up and running live, 2 to 3x faster than a traditional implementation, and that the cash outlay wasn't, all front on that implementation and their ability to just go live and operate with the processes being run, by the partnership between us and Deloitte and OneSource, and the application management services and support. They didn't have to think about huge multiple different decisions, and so super exciting. I think we're just seeing a whole bunch of CFOs really revisit their model on this. So that kind of, guys, I want to be conscious of time. If you look at where we're really heading, maybe what I can do is have each of you just close out with a bit of your thoughts before we go into Q&A. And Jason, why don't we start with you, right? So, we've got the summary of finance as a service, time to come. The tech debt's just too burdensome. The pandemic has really brought this to light. What's going to happen for the companies that embrace it versus the ones that don't, and just some general views on that. And then I'll throw the same question, Rakesh, to you and Andy, and then we'll go into Q&A.
Yeah, sounds great. And I think what we're going to find is there's going to be a pretty significant, I would say, consolidation and restructuring of the starts and stops of competitors and sets of services and vertical integration in the industry. And the folks that are not ahead on this are going to not only get, I think, significantly disadvantaged from their traditional peers, but the incumbent, the orthogonals I mentioned earlier that are coming hard into the market are really just going to be able to outflank and outmaneuver so greatly that it's just going to be a sort of a slow, painful run out for the businesses that don't move pretty aggressively.
Yeah, I mean, I can't imagine people trying to make, I think people have to move. I'll go back to this analogy where we used to build cars from scratch, right? What tires should we decide? What windshield? I don't think people have time for that. I think, this Uber as a service, this type of give it to me, make sure it's the best of breed, and put it in a cost and model that, scales with me. I can't see, organizations that don't start thinking this way really be able to keep up with the competitive landscape. So if you look at that, Andy, any kind of, you guys have been driving this theme overall with cloud and the cloud platform. Anything to add there?
I couldn't agree more with Jason's perspective from two angles. Number one, we're already seeing that merger and acquisition type activity increase in the market, not just across health insurance carriers, but across the distribution chain, and also in other types of combinations because of the incredibly wide varied nature of the healthcare ecosystem as a whole. That's been one of the strengths of Workday in terms of mergers and acquisitions, and being able to facilitate a smooth acquisition or merger and combination, even of unlike businesses. And when you start to then blend that with the capability of finance as a service to say, these combinations are for financial health, to drive new insights and closer member relationships, and to return more to shareholders. It just, it's sort of a tremendous combination that accelerates the time to value potentially for these organizations.
Yeah, Andy, that's such a good point. I wasn't even thinking about all of the disruption that's going to have the mergers and divestitures, but the ability to turn on finance, a whole finance function as a service to start. Really, wow, that's great. That's really, really powerful. I didn't even thought about that angle, but a great call out. Guys, I know we're getting close to end of the time and we're going to hit Q&A, but Rakesh, any final thoughts?
No, I think Jason and Andy pretty much covered it. Guys, look, the healthcare ecosystem is no longer just payers, right? Payers are PBMs, PBMs are providers, and it's all merging. And I think the ability of this partnership and finance as a service to deliver real-time, quick benefits to the CFO and the finance community, for them to really enable their members as they move across this ecosystem, if you will, which is fast blurring, is a unique opportunity. I think the current situations have only heightened and emphasized the need to really act fast. And I think this particular service, along with Workday and Deloitte and Genpact's ability to really run this, provides CFOs to do that. So that's all that I would say in summary.
Excellent. So, hey, Jennifer, I know we don't have a lot of time left over for questions. Any of the top ones? Anyone? Let's go with one more before we end.
Yep, absolutely. So we do have a question from the audience. So this one is directed for Jason. So what questions should I consider before undertaking this journey?
Jason, over to you, buddy.
That's a really good setup. Absolutely. So in summary, I think there are a few things to consider. One is, in questions, do you have a clear vision for what you're trying to achieve? And do you have the right partners that are going to help drive that with you? The second is, can you articulate like a day in the life? Because starting change management for an organization is so important, and allowing people to feel, taste, touch, if you will, your vision for this transformed finance capability is going to be so important, not just to get the buy-in up front, but to keep people, interested and engaged. And then the standard pieces around a business case that's clear. I think that this model supports a pretty easy construct of a business case, with, as we talked about earlier today, but always important. And then clear sponsorship. He or she, whomever in the organization, that is going to be the one that really captains this through the journey, and it will feel different than a traditional monolithic, multi-year, on-prem system replacement. It's going to feel much more nimble. There's going to be capabilities to deliver much more rapidly and to the business, back to time to value. But it's always important to have that clear champion that's going to put this at the top of their agenda every day to deliver the value for the business.
No, that's great. What a great question to close on. So I just want to thank our panel members, Rakesh, Jason, Andy. Hopefully this has got people pretty excited to start learning more, and I think especially around this partnership, and you see the best and the brightest coming together. The good news is you've got the leading players that have worked together to solve this, really make it seamless for the client of how it's delivered through, one throat to choke, as people like to say. It's going to model their overall interest in transforming their finance function. So really, guys, I want to thank you so much for spending some time with us. I think it's going to have a dramatic change in the industry. And then if you're interested in learning more for the finance as a service, brought to you from Gen 1 partnership across Deloitte, Genpact, OneSource, and Workday, feel free to visit us on www.gen1solution.com. And guys, just once again, thanks, and looking forward to our next conversation on the subject.
Sounds good. Thank you, everyone.